All right, so the big news is that Warren Buffett is preparing to step down as CEO of Berkshire Hathaway. Greg Abel is taking the reins. But really, the question everyone is asking is, what kind of financial fortress is he actually leaving behind? Well, we're going to deconstruct the entire thing piece by piece to figure that out. It's one of the most fascinating portfolios on the planet. Okay, let's just kick things off with a number that is, well, it's pretty staggering. Berkshire is sitting on almost $382 billion, and that's in cash and short-term U.S. Treasury bills. Now, this isn't just some rainy day fund, This is a war chest of absolutely historic proportions.
Now, here's where it gets really interesting. Compare that massive cash pile to the total value of their entire public stock portfolio. For the first time in, well, modern history, Berkshire's cash position is way bigger than all of its stock holdings put together. Think about that for a second.
And the stocks they do own are incredibly concentrated. I mean, just 5 companies, 5, make up 70% of the entire portfolio. So this sets up the central puzzle that we're going to explore today. Why would you run a portfolio that's so concentrated and then back it up with this unprecedented mountain of cash? What's the strategy here? All right, here's how we're going to break this all down for you. First, we'll look at Buffett's blueprint and that core compounding engine. Then, we'll see how the empire is expanding across the globe. After that, we'll really unpack the purpose of that strategic cash weapon. And finally, we'll see how this whole formula is actually built to last. So let's dive into the first pillar of this whole thing. The entire structure, really, is built on a simple philosophy. Own a small number of truly exceptional companies, and then just hold on to them for the long haul. And here they are, the Big Five. These are the companies that form the absolute backbone of Berkshire's compounding machine. You got to understand, these aren't just random stock picks. No. These are deep, foundational ownership stakes in what are basically pillars of the American economy. Let's take Apple, for example. It's the portfolio's flagship holding. Berkshire doesn't see it as just a tech company that makes gadgets. They see it as a global consumer ecosystem. And get this, even after a return of over 570%, they've recently trimmed the position a bit. Now, that's not because they've lost faith, it's just smart risk management. They don't want any single company to become too big a piece of the pie. Okay, to really understand the power of this buy and hold forever strategy, look no further than Coca-Cola. Back in the late 80s and early 90s, Berkshire invested about $1.3 billion to get its stake. Now keep that number in your head, $1.3 billion. Because today, this is the dividend check Berkshire gets from Coca-Cola every year. $816 million. Every single year. That's just incredible. I mean, that is the magic of compounding in action, right there. The dividend income alone is so huge that it pays back their entire original investment every couple of years. It's basically a perpetual cash engine at this point. And they use this exact same playbook with American Express. Buffett first bought in way back during the salad oil scandal in the 1960s. The market basically thought Amex was toast, but Buffett saw the strength of the brand, he bought into the panic, and he's held on for decades. And that initial bet, it's compounded into a position worth tens of billions today. All right, let's move on to the second pillar, because this portfolio isn't just sitting still, right? It's actually evolving. It's looking beyond those classic U.S. giants and seeking out new ways to diversify and find value. And a perfect example of this is their huge investment in Japan. See, they aren't just buying Japanese stocks the way you or I might. They're buying what they call mini Berkshires. Essentially, they're buying pieces of these massive, diversified industrial conglomerates that are kicking off cash flow from dozens of different businesses all at once. So what are these companies? They're the 5 giant Japanese trading houses, the Sogo Shosha. Berkshire has taken huge stakes in them, now owning between 8.5% to 10% of each one. And the genius of this move, they get instant global diversification, strong dividends, big buybacks, and it's all funded super efficiently with low-interest Japanese debt. Okay, back here in the US, their bet on energy has gotten a lot deeper and a lot more complex. It's really a 3-layered strategy. First, they own a huge stable stake in Chevron. Second, they have what is basically a controlling interest in Occidental Petroleum, or Oxy. And third, and this is a key move for 2025, they used cash to buy Oxy's chemical business, OxyChem, outright. So you see, this is way beyond just stock picking. This is a move for deep, direct industrial control. And that brings us to our third pillar, that absolutely enormous pile of cash. So what's its real purpose? I can tell you, it is far more than just idle money sitting on the sidelines.
It's really important here to reject the common view that cash is unproductive. For Buffett, it serves two absolutely critical functions. First, it's insurance. It protects the entire enterprise from any kind of shock. And second, it's strategic dry powder. It's the option to deploy billions of dollars when the market panics and creates those once-in-a-generation buying opportunities. So, how does all of this survive its creator? That's the billion-dollar question, right? Well, the final piece of the puzzle is understanding that this is a system. It's a system built on discipline, and it's designed for continuity. Just look at the story of BYD, the Chinese electric vehicle maker. This is a powerful lesson in discipline. I mean, it was a legendary investment. They turned $230 million into about $9 billion, a massive home run. But when the competitive landscape changed, what did they do? They sold the entire position. And that shows you something really important. Having the discipline to sell a massive winner is just as critical as having the vision to buy it in the first place. And the continuity part? Well, that's crystal clear. The succession plan has been in place and transparent for a long time. Greg Abel, he takes over the operations. Warren Buffett stays on as chairman. And his investment lieutenants Todd Combs and Ted Weschler, they keep managing the public stocks. The whole system is designed to outlive any single person. So, let's bring it all together, shall we? The 2025 Berkshire portfolio is basically a fortress built on three powerful pillars. Number one, deep, concentrated ownership in a few fantastic U.S. businesses. Number two, smart global diversification through these strong conglomerate-type companies. And number three, a historic cash reserve that acts as both a shield and a spear. So, when you strip everything else away, what's the single guiding principle? What's the one timeless idea that holds this entire financial machine together?
Well, it comes down to this. This is the core philosophy. Buffett wins not by being faster than everybody else, but by waiting longer than everybody else, waiting until the price becomes his ally. It's all about having the discipline and, crucially, the capital to just wait, letting fear in the market do the work for you. And that, right there, is the engine that has been compounding wealth for more than half a century.